Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a fantastic day. We're taking a quick look here at Bitcoin. We're going to make this a little faster than usual. Just kind of mostly going to be taking a look at the back end data here. Really want to focus on liquidation levels and of course, just some open interest scenarios as well. Okay, so again, if you're new to the channel, not a financial advisor, hope you can learn something here today. So quickly, just to note, just to jump right into the larger time frames here. Let's go ahead and take a quick peek at the weekly, since we are in a situation right now where this weekly candlestick is almost going to close. This weekly candle is closing very, very close to a doji candle. Okay, so here in just a couple more hours, 2 more hours, we'll have a closure there. If we close at about 34.5 or lower, we'll effectively have a doji candle, potentially even a gravestone. Again, those are more bearish signs. It's not a surprise because of obviously this strength here just leading into it. Okay, again, we have 2 strong weeks. It would make sense for us to have some type of correction soon. Okay, but again, don't kid yourself. We're doing very well on the weekly. We are rejecting at 70 on the RSI. Keep that in mind. That is a bit of a resistance level for us. We also have the moving averages doing very well for us. If we look at a larger time frame, all 3 moving averages are effectively helping us understand that we're on the right side of the track. So again, 28,600 is that key level there for Bitcoin. A strong, strong support based on all 3 moving averages. Okay, so again, the weekly is looking pretty darn good. The daily is still looking okay, but again, I'm still on the bias of the price action retesting that 34,000 slash potentially even lower, again 33,000, maybe even beyond that, just based on liquidations that are going to occur. So let's talk about that, just so you kind of get perspective here. First of all, fear and greed index, we're totally fine there. Okay, everyone's throwing money at cryptocurrency right now and having a good old time. They're not really too worried about the price pulling back. I'm a little concerned just based on some obvious stuff we've covered in the past. If you're new to the channel, this is the first time watching, let me show you exactly why I'm concerned the most. Let's take a look here at open interest. First of all, this is kind of just a preface here, if you will, where our most recent 12 hours we can kind of see longs are positioned, and this is just an ugly color, I'm sorry, it kind of randomly generates that. We're looking at about longs being hedged mostly at 35,000. We've even got some late longs here at about 34,800. Okay, mind you, price just dropped down to 34.6. Okay, so that's not great. And let's take a quick look here at the shorts to see where they are at. Shorts are sitting pretty right there at 35,000. Exactly where I have my short position open. Granted, my short position was open a few days ago, not just today, but still, you get the gist, right? Take a look at the last 7 days here. Let's take a quick peek at the last. Let's stick with the last 7 days here. Let's add a couple of exchanges here. And this is essentially liquidation levels. And these are basically based on, leverage, right? So when you use leverage, if you ever used it, large amount of leverage, the closer your liquidation is. And this kind of tells me here that there's been a significant amount of leverage used at 33,900, basically 34,000. Okay, so we got a large amount there. It keeps building. It's at 120. It was at 100 last week, and it keeps going. So the bottom line here is that there's a lot of longs, super confident the price isn't going to drop below 34,000. But if it does, just keep in mind that amount of liquidation will push the price action down a lot further, a lot faster. So if you're considering limit orders for spot exchange, for example, maybe consider 33,000, 32.5 if I can recall correctly. We'll double check those levels. But the bottom line here is that the price is due for a correction. It would make sense. The market movers are completely manipulative. And the reason why I say that is just because we had some significant liquidation levels up here at 35.5, and the price, wicks up there, wrecks all the shorts, hits the old reset button. What's going to keep them from hitting the reset button for these guys here? I don't know. To me, it just makes a lot more sense for them to wreck those longs and then to just take off from there. That, to me, is the most sensible. So the price comes down here soon, which I'm expecting or anticipating. I think that we're going to see some kind of push to the upside here moving forward as a result of that. Okay, again, it's just that natural rinse and repeat that the market movers love to do. All right, so that's kind of where we're at there. Daily is also printing a pretty significant MACD divergence. Now, again, this isn't a 100% guarantee, but it increases the odds of the likelihood of the price action coming down. Just look at the last time the MACD diverged effectively, right here. Right here, October 11th, the price action came down roughly 3 or 4 red days. Bottomed out for a few days and came back up on a surge, okay? So again, I'm not saying we're just going to see this happen. I am saying, though, that this makes a lot more sense. This makes sense, and even this makes sense, okay? We take a look at Elliott Wave, there is definite potential for these 3 levels to be retested. Again, just something to kind of think about. All this overextension has to come to an end. Again, I'm all for a bullish uptrend, but I just don't think we're there yet. Just me personally. Again, I'm just being realistic. I'm looking at this, you know, without emotion and just kind of helping kind of try to talk some sense into some folks, right? So if this made sense to you and I'm explaining this correctly, please like, subscribe, and follow. More importantly, just like and comment down below because YouTube sucks for the algorithm with my videos just because I make so many every day. Okay? But it would be great to get some more people to discover this. Taking a look quickly at the 4 hour, you can kind of see the moving averages are barely holding on here. 50, sort of holding on there. We have lost this ascending trend. Okay? So while we are still above the 50-day, that's good. The ascending trend line is gone now. So we should likely, again, not necessarily going to be a free fall, but we should expect that to be a resistance and the price action should start to work its way down. So we'll start to kind of draw trend lines out to see how these lower lows treat us. Okay. So again, this is still a little premature. This is the weekend, but we saw a lot more volatility this weekend than normal. So anything could honestly happen right now. But there's a ton of volume up here. Again, we lose that little volume shelf at 34,000. Anything could happen in here. There's a very large range of volume that's left to be swept, and it would make total sense for some of these fair value down below to get retested. I'm speculating we're going to at least again see this level here at about 33.3 retested there to sweep that lower liquidity, that sell side liquidity, and then the price ramps up here. Because again, it's very common for the price to work itself into these channels here, and then to effectively rip this newest lower level. The inverse will apply too. I mean, we very well could see something like this too, where the price action comes down, retests, and then shoots up. That's more so what I'm thinking. But no matter how you look at it, things come in threes, and this is kind of the beginning of a power three situation now. Okay, that's pretty much all I got there. No need to really look at the micro. Honestly, this 4 hour time frame is pretty telling here. We are getting really close to being below 50, and I say close because we technically haven't closed underneath that yet, but it's certainly looking like it wants to. We've also got a MACD divergence as well. I mean, what more do you want? Double divergences on both time frames, both macro time frames. I don't know. I'm leaning a little bit more towards the price still pulling back. So again, if you're a spot holder, which I hope that you are, please make sure you add to your bags as the price comes down. These are the Fibonacci retracement levels if the price were to pull back. Let me go ahead and pull this chart up here. There we go. Right there. 31.5, 30,000 even, and 28.8. Again, 28.8 is still a possibility, bear in mind, because again, that's right where we have the most amount of volume based on previous support. Remember how we talked about the moving averages on the weekly? They're all hanging out right there. Okay. Again, just saying that's a possibility. Is it a probability? Not yet. Okay. Try not to attach yourself to a philosophy that we are just going down and we're totally bearish and all sentiment there. Not even close. Bitcoin is bullish right now, but it's not a bull run just yet until we break free from this range. If we break upwards, then it's all right. That's perfectly fine. It could happen. I actually welcome it because I've got a pretty decent spot bag in the teens to 20s, and I'm not upset with Bitcoin going up. Trust me on that one. All right, folks, I hope this made sense and I described this correctly. Thanks again for watching. Please help grow the channel. Don't forget to jump on over to our Twitter, Telegram, or Discord if you want to be part of our signals. Last month was fantastic. This month is starting off to be pretty good, and we can see here that our trade signals have a pretty high accuracy rate. Again, I like to swing trade with low leverage, low position size, and I just really, truly like surviving markets. I don't like getting wrecked and hitting the reset button. Done that a few times in my life. Not going to happen again. All right, thanks again. Hope you have a great rest of your day. We'll see you in the next one. Take care.